Hi, I'm Josh Brown. Welcome to Breaking Away. I'm here with Michael Schwartz of Magnus Financial. Michael founded the firm just recently. When did you guys launch?
We launched in September of 2017, Josh.
So you still have that new firm smell?
New firm smell, new firm taste.
New firm attitude?
That's
excitement. Right. All right. Tell us about Magnus Financial. What's your story and why did you launch the firm last year?
So I've been in the retail financial services business going on about 20 years. I spent the first 19 plus years on the broker-dealer side at Northwestern Mutual.
Right.
I was fortunate enough at the end of 2016 to be recognized in the Financial Times as one of the top 400 advisors in the country. And subsequent to that, my business took off in a positive way. And in an effort to further align with clients as a true independent advisor and fiduciary, we launched Magnus Financial Group, which is set up as a registered investment advisory firm under the SEC.
Right. Okay. So what's the general idea of what clients can expect when they work with Magnus Financial?
I think the general premise is to come in and to create an integrated and holistic financial plan, but with an emphasis on tax sensitivity.
Okay.
More times than not, our clients today were in fact working with another firm when we first met them, and the goal is to try to create efficiency on their balance sheet by portfolio optimization, cash flow efficiency, tax strategies, and a true bundled approach to their financial needs.
So you're looking at things in a more holistic way than perhaps they were arranged originally in a client's portfolio.
Correct. So oftentimes when they'll come to us, they'll have the right idea with the wrong execution.
Right.
There might be part of their financial planning needs that have been executed on, but not a true integrated and holistic approach.
So you're in maybe one of the most wealthy cities in America is New York City. It's a great market. It's also very competitive. So there are millionaires everywhere, but there are people who manage money for millionaires everywhere as well. Could you speak a little bit about the benefits and maybe the challenges of being here in New York?
Yeah, I think the benefits is that there's an unlimited supply of clients and people to call on.
At least while the market's good.
That's the way it typically works.
Right.
People do want to talk to you when the market's up. When the market's down, it's a little bit more challenging. Sure. But I think one of the difficulties is that there are people in our city that are being called on from advisors all throughout the world.
Right, and that's just by virtue of the fact that they're high net worth households and some of them are very visible, right? They're executives or whatever the case may be.
Yeah, they're very marketable to the financial advisory space.
So if we were to ask your clients why they work with you, what are some of the things you think they would say, or what are some of the reasons that you think they might give?
I would say the first and foremost would be a values match from a loyalty, integrity, committed approach to really seeing our clients' needs first, putting their challenges ahead of ours, and operating in a consultative approach to clients.
So what was the reason to break away, start your own firm? You mentioned you were at another firm for 19 years. You must have been happy. So what made you say, all right, now is the time, let's do our own thing?
Well, I think that, one, the firm that I was affiliated with for 19 years is an amazing institution and has a fantastic pedigree on the street.
All right, you covered yourself. Now what? You're good. Go
on. There was the timing of things, whereas we're in a 7-8 year bull market, and I think the timing to leave with where the market was is a little bit easier, meaning that if we were in a bear market or a recession, the ability to make a change and transition would have been extremely difficult.
People are more nervous about moving assets from one institution to another when they feel like things are in flux.
That's right. And it also, I think, requires more heavy lifting on the advisor end to work with clients when things are in flux, Josh.
I agree. So as things are quiet and placid and it's something you want to do anyway, it's a better opportunity to do things the way you'd want to do them rather than in some kind of a hectic state.
That's right. You can really, I think, transition with direction and speed as opposed to being frenzied and having no direction.
So it sounds like there was no real final catalyst. It was just something that you'd been building up with, and then at a certain point, you talk with your team and you say, okay, guys, we're pulling the trigger on September 1st, or how does that, something like that typically go from being on the drawing board to, okay, it's go time?
Yeah, it doesn't really happen overnight, and there was no proverbial straw that broke the camel's back in terms of the move. It was more of a build-up over time about identifying opportunities in the marketplace with respect to technology that the industry offers, outside aggregation software, additional products and suite of services to just expand upon your client base.
So what resources did you use to guide your decision-making process in terms of selecting, for example, aggregation software or portfolio management software? Like how did you know what you wanted to use and what you thought you might need as a firm?
So I think it started with benchmarking what the opportunities were based upon the existing software at the old firm. So we had a working knowledge of what we liked and what we didn't like.
Okay.
And from there, we went out and...
So then you're looking for a match. We want to do this. We don't need that. Who has this? And then you're demoing or...
That's right. Demo, speak with a couple of other references to get some perspective on some of the softwares that were out there.
By the time you go through that process, it's not long before you're actually in a position to start giving people advice about what you did. So I guess in that vein, I'd love to ask you, was there anything that you would say you stumbled on, or maybe something that you would do differently, even in the recent history of having just opened a firm? Like if for an advisor watching this who's thinking about doing the same thing that you've just done, what's like one thing you could think of where you would say, spend more time on this decision, or maybe don't do this?
Yeah, I think that's a really good question. I would say to have a more well thought out strategy on how to communicate to clients the reason for the move.
Okay.
Not just to expect that you've had a relationship with 18 or with a client for 18 years that they're automatically going to come over with you.
Even if they like you, there's still a required explanation for why they have to uproot holdings and investments.
That's right, and to put yourself in the client's shoes to know that it is not only was it a reflection point in my life, but it also could be a reflection point in the client's life to identify if we're still the right fit.
That's a great point. It's a moment where there's going to be some change anyway. So maybe we should be thinking about even bigger questions. And so going through that experience, you must have learned things about your clients that maybe you would not have asked them about or would not have come up had you not broached the topic of, hey, we're starting a new investment firm.
I think we have a better understanding and a deeper appreciation now for clients' needs.
Right.
About having these deep, difficult conversations about the transition to really understand what the clients need, what they want, and what they weren't necessarily happy about at the old firm.
So it's almost like an affirmation or a reaffirmation to some extent, having those conversations that wouldn't have come up otherwise.
Absolutely.
That's great. How does Magnus go about planning, investing, and reporting for clients? We can maybe get into your software stack a little bit, some of the tools that you're using, or maybe even just the process in general, however you'd want to talk about it.
Yeah, so we can talk a little bit about the process first, and then I can layer in some of the software and the tool and the technology on the end. So from the beginning, we take a consultative approach. So the first meeting, Josh, is really more of a financial checkup where we kick the tires, we look under the hood, and we want to get an idea for what the clients want to accomplish. We try to take an academic approach and a scientific approach to financial modeling, understanding that nobody can catch the falling knife and market time. We want to provide a process and a blueprint that will give the clients the best probability of achieving a desired outcome.
So you're doing that with financial planning software and making sure that the things that are important to them actually end up in some way quantified.
That's right. It's both a quantitative as well as a qualitative approach.
Sure, of course.
I think asking the right questions on the intake allows us to really provide a custom fit analysis using the tools and the technology which Magnus now has and uses for clients.
So what financial planning software are you working with now?
So currently we use eMoney
Sure.
We use Orion, Salesforce for our CRM, and we use some additional financial planning and investment modeling from Riskalyze to Morningstar to Bloomberg and a few others.
Shout out to Riskalyze. So let's talk about how you're using Orion. We use, full disclosure, we use Orion as well, as do 1,200 other firms in the industry. What specifically do you think the clients in their interactions with you, what do they get out of having Orion be somewhat central to that?
Well, I think it helps. Using the Orion software and technology not only helps the client with understanding their models, but it also helps us by having a deeper appreciation and understanding for our business model. Meaning Orion can categorize for us specifically how many clients are IRA and or retail, how many clients are Roth IRAs versus traditional IRAs. So it gives us a deeper appreciation, which allows us to further
Get a top-down view of what you're
That's
doing
right.
and who you're doing it for, and in what types of accounts.
And I think where clients, where I think the impact with clients is significant is on the asset class breakdown and variance. So as it relates to ongoing portfolio monitoring and rebalancing tools, using the Orion software to understand where there are specific drifts in an underlying asset allocation for each client's account.
Now, what about the custodian decision? Because for most advisors who are breaking away, that actually comes first before they figure any of the other pieces out. Was that the case with you guys? And what were some of the deciding factors?
That was the case. That was the very large and important and critical decision. We chose.
A lot of decisions stem from that one decision. It's like a tree.
That's right.
And that's almost like the trunk.
It kind of, you make the decision and then everything kind of rolls out
To some
from
extent,
it.
right.
Yeah, and understanding that the firm that you're using for the custody agent has to be integrated with all of your software as well is obviously an important piece.
If they don't work together, it's a non-starter for all the software programs that follow. So.
But coming out of the broker-dealer world, you also don't know what you don't know.
That's right.
So your understanding and appreciation for the technology offerings are limited in scope. So going into it with a blank canvas allowed us to really understand and appreciate, as opposed to being reactionary and making a decision and then getting upset afterwards.
It's funny, the blank canvas when you're like first looking at software solutions and custodians, especially coming out of the broker-dealer world. The broker-dealer world, they say, all right, here's your tech. This is what it is. And now it's like, wait, I can have anything I want. I can choose any, and that's great for like 5 seconds, and then it slowly dawns on you, oh no, I have to make all these decisions, and what if I pick the wrong thing? So to some extent, there's like a little bit of trepidation when you have so much freedom, and so it requires really focusing in on what's important.
That's right. You go from a kid in a candy store to realize I can take that off the shelf, I can do that, I can customize it. Then you realize, oh my goodness, I'm in the middle of the ocean and I'm by myself, and I got to get back to shore.
Yeah. But it works out. It sounds like it worked out for you guys.
We're very happy with the
move. Did you need to hire staff to manage your technology, or were you? I know you began the firm with a group already. So was it just a matter of deciding who learns what, or did you bring people on to consult, or what was the process to get up to speed with all these new tools?
So we brought some people on to consult to give us a knowledge on how to fully integrate and use the technology, and we did hire around some of the additional technology advances that we made.
So that way you have people coming in who can actually work with all this stuff, and it's not just something you're paying a subscription for and hoping to get some value out of.
Yeah, I fundamentally believe having a specialist in a specific area provides efficiency, which ultimately is what we're all looking for in the business.
Totally agree. Last couple of questions. What advice would you give to advisors who are on the verge of breaking away or strongly considering it but haven't yet committed to doing it?
I would give advisors the perspective of looking at what's right in your current environment. So not to come at it with a negative perspective, but to look at it what's right so they can really have a true comparison on an apple-to-apple basis.
So to say, okay, this isn't totally terrible, I could stay here, and here's the things that might keep me here, and then first think about is the grass greener.
That's right, because there's the proverbial adage, the grass is always greener on the other side of the fence.
And anyone could find flaws with anything.
That's right.
And
so if we look at things, or if an advisor is coming into the decision based upon what they don't like, there's going to be a blind spot with their decision making.
Right. So my last question is, what's the one thing that you could not run your business without?
I could not run my business,
You're supposed to say your coworkers, by the way. Okay, but answer, honestly.
The one thing I couldn't do it is the human capital, the team,
Nailed it.
and
Look at
the
that.
people
See,
around
pro.
us.
Right.
That's number one, and then two is going to be the technology that we've built around the firm.
Okay, so technological capability and then the right people in place actually making use of it. That's strong to quite strong as an answer.
That's right.
Okay, so anything else that you think we should know about Magnus Financial or about your plans for the future? Anything that you want to announce? The iPhone 9 maybe? What are you guys working on? Like what's the next initiative for the firm?
I think what's really interesting for me in my shoes, Josh, is the idea of actually running an enterprise and focusing on business development. Whereas at my old firm, I was spending 90% of my time in a client-facing role, and to understand that I need to spend more time in a business development role.
Now you're an entrepreneur.
A true entrepreneur.
That's right.
And to really focus on that is exciting, intriguing, and where I see the next level of growth coming from Magnus.
Awesome. My guest today has been Michael Schwartz. Thank you for watching Breaking Away on Asset TV. We'll see you next time. Thanks, Michael.
Thanks, Josh.